Thank you for being with us so far and for watching the third part of this video. It is a very long video because I try to make you understand every little detail of market structures. I might have missed some other important messages I might like to put across because I'm recording directly, no pre-plan of this video. Just came on PC and decided to make the video market structure. So it's most likely that I have missed some important parts. So if there is anything, any questions, do not hesitate to ask, as I may remember some other things I might have said after the whole video is wrapped up. Thank you for watching again, and welcome to the third and final part of this market structure lesson. So I have looked at this particular coin. I would like to take a look at another coin to see the structure. Okay, all right, this is TRS. Okay, from this this is the daily chart. From this, merely not looking at this information right here, some people have seen already a bullish structure. Assuming from this low, I may not take this class a low, I'm just emphasizing now. So from to that high, then from that high to this low, then from this low to this high. This is the low. I'm just putting it here so you can easily see it. That is a bullish structure, right? But let's look at the overall picture. Now, we have from this beginning, we have this low. This is a low, right? Let me mark that. This is a low. And then we have this high. Then we have this high. Remember, or see, it came to this low. Price came to this low. Didn't break it, bounced up, and it got broken here. But this is the high leading to the lowest low. And for this low to have broken, we have a lower low here, which means from this point to this point to this point, the market is what is bearish. From this point to this point to this point, it is a bearish market structure. Now, from this lowest point, what do we see? We see some bit of rising momentum, small momentum like no volume. Then from here, we see a big shoot up, breaking this high. Remember, this is a high to break. Once this high is broken, the market is turning, is bullish, not even turning bullish, it's bullish. Now, this high has been broken here. Some people, you remember, this is the low. This is the lowest low, and now this is a higher high to this side. We want to see if the market is correcting or has done a 50% correction from the lowest low. This is a 50% mark. Has it done it from this side? No, it hasn't. But many people, because this is a 50% mark, it is a minimum mark. I want to see it retrace before I accept that the high is in. So me seeing this and this market moving back up, maybe from here, then it starts moving back up, I won't trade this as resistance. Some people will trade it as resistance because price came in and fell, but it didn't get to the point I want it. So I won't take it as a good resistance because the high is not yet in. I don't have a complete wave 0 to 1 yet for me. Now, if you look at it, some people may say, okay, where is the last low? Maybe this, from this up move, maybe this low to this side. Obviously, from here to here, it will correct 50%. Sorry. From here to here. Yes. Then some people will say it's the low, then they will take this low again to this side. People that trace Fibonacci. Then what do we see? We see this move back down, coming way below the 50%, way below the 618%, coming way below the 78.6%, almost coming to the lowest point. this shouldn't be so, but they are trading this. Maybe some people will like to trade at the 50% or 68% as the golden ratio, or the 78.6% as a golden ratio. But then if they have reached up, it's likely there's a possibility that they have been taken out from the market before it then start to reverse. But that is because the wave one has not completed. Now, like I said, this low to the high that breaks the high to break. This is a high to break for me, and it's broken here. Market structure is bullish, but is the high in for the high, for this to be the high. So this can be 0 to 1 when we talk of Elliot waves. I want to see this get to 50 or 0.5, but as it's not, then the high is not yet in. So we still have 0 here, but this is not 1. This will be 1 if it retraces up to 50%. Then I drag it up. Now this is the 50% level. We see it coming now up to the way to the 50% here. Now remember our ABC again. So from this side, it comes down. From this side, 0. It comes down to the 50%. This is the 50%, and it comes a bit below it. That becomes A. Then we have B here. Then we have C, either here or here, making the lowest low. This is the low to break. This is the low to break. Now this is a new high to break for continuation of market structure. For it to have broken this high means it's bullish. Now this becomes our 0 to 1, 1 to 2. Now we are moving on the third wave. Let me use this is my 0 to 1, and this is my 2 on the bigger wave. And here we are still going to see 3, but we are not yet there. So I expect something to be way above 1 because we are bullish now on this coin. Then maybe a retracement for 4 and another 5, the 5 to be higher than 3. That is what I expect. Something like this on the bigger picture. But here we might have something come close here, a retracement down, another high, a retracement down, then the 5th, because we may have 1, 2, 3, 4, 5. As they move in waves and sub waves like that. So it won't just be a straight line up to 3. 3 may not even be here. It may even be as far up there. Then retraces back down and continue. But so far, on the overall time frame, on the daily time frame, this market structure is bullish. Remember what I said. Some people will see this from this side to this low, then back to this high, lower high, then this low, and say the market structure has broken. So because they believe the market structure has broken because it breaks this high, this low, sorry, they want to short around this level. And what happens? If they short and place stops around there, they are taken out already because they are not reading the market structure as they should. You want to read from a high to a low making an high to a low making the lower low, and from a lower low to an higher high. That are the highs to break and the low to break. So that is that for this coin. Let's take a look at another coin. Okay, I have a meditated or okay, like I said, in this case where we have this option, this bear flag is the same thing we have here. We have this bear flag, but looking at this bear flag, we have a structure in it. If we are to ignore all this information from the left of this, if we are to ignore all this information, if we are to ignore if we are to ignore all this information and just look at this from here up to here, we have a market structure. Okay, let's see it. So we have a low here to an high, higher low, higher high, higher low, higher high, Is this a lower low or an higher high? Seems like a lower low. But then it came back to make an higher high. Then lower, higher low, now to an higher high. But then what do we expect of this structure itself? We expect it to break down, right? We expect it to break down. But we still have the bullish structure in place. But it will only break down once this low is taken out. So we may expect a form of correction. If this happens from this side, then it comes to break this low, then this pattern will work as it should work. But then let's look at the overall. Let's look at the overall structure. This is a low. This is an high. This side is the same as this side. So let's take this. Let me mark it. We have this low. We have this side. Okay, this is higher. So we have this side. Then what do we have here? We have a lower low, which means market structure has at this point, it has closed below this, or it has broken it. We have a bearish structure. This is the low. This is a high to break. This is a high leading to a lower low of this. So we have a bearish market structure. When price started moving up in small momentum, it's resisted there. You see it as a point of resistance here. Then it breaks. Once this high is broken, what does it mean? It means the market is now bullish. Now, if we take this as our high now, because we see it correcting here, we want to take from here. We want to take from this low to the new high. Is it retracing up to 50% of the move? It hasn't done that. That means the high for this move is not yet in. We can't take this our 0 to 1 wave and call this 2. No, the wave is not yet completed. This is probably a sub wave, and we are looking for the main wave. So if this were here by the time I was trading, I may do this. Is this moving down? No. Is this also correcting down 50%? No. Now we have this side. Has this side done 50%? This is a 50% level. Yes, it has done so. Now this becomes the valid high. The high is in as at this level. Now see, we have a correction down here. We have another correction down here. Then we have a correction down here. Remember what I said. Some people, for this low to break, they will say the market is bearish. For this low to break, they will say the market is bearish. But then I will take it as this is a low to break. This now is the high to break. Then I will take this as the high 0 to 1, A, B, and now this is C. This can even be C. You see it? But then this is still the low to break. This is the low leading to the higher high. This is not the valid high because the correction didn't make 50% retracement or 50% correction. So it is not organic enough to me. You can trade it if you take that as a filter, no matter the length of correction. If you take it as valid swing low, fine. But high will not do that because it didn't make 50% of the move of the correction. So this now has done 50% of the correction at least. Now we've seen it at even 6.18, 61 or 62% move, which means from this point I'm expecting it to go way higher. What I will then do is, this may be my 0 to 1. This is 2. Then I'm expecting 3 above. Then probably 4 and 5 above. Like this. This will be what I'm expecting. So this will be 1, 2, 3. It can be higher. It's not exact point. 4, 5. It can also be higher. Not exact point. Just an illustration. So this will be what I will be expecting from this market. But then we have this pattern, and this is a bearish pattern. Let me remove this. So for people, before I go back to the pattern, for people taking that this low is broken and are bearish, they may want to be shorting this supply because there is a supply here. There is a supply here. Because some people will say this low, we have a point moving here, they're moving to this side. For it to break means it's bearish, and whenever price returns to this supply that breaks this low or broke this low, any English that is correct, then they are expecting to short this market. You can see on this red candle a selling momentum, but then it's coming back up and we still have a selling momentum as at the moment. Some people are selling because they believe this market structure has reversed, but then this is what we had: A, B, C. So from the C, the correction for this entire wave 1 is in and organic, and I expect a wave 2 to 3. So what we have because of this pattern is this: the pattern is bearish, yes, but then we have higher highs and higher lows. This can be our wave 1 of this wave 3. We can have something like this. This will be 0 to 1, 2, maybe 3, 4, 5. Like this. Then like this. So this will be our 1, 2. So this can see they are shorting here, and this pattern is bearish. This two may break, but then we'll be washing out for this 2. We do not want it to break. We do not want this 2 to break. If it's going to be our sub wave 1, 2, it may come low. This wouldn't matter because all this together will be wave 1. We might even have wave 1 finish already. Maybe this one is 1, 2, 3. This is short, so it can be used as 3. So maybe we have 1, 2, 3, 4, 5. Okay, see, it's even 5 already. So here we have 1, 2, 3, 4. This is 5. So from this point, we expect a correction of year to year. Let's draw a Fibonacci, at least 50%, right? So yeah. So we are expecting the price to at least come back to around this low. If it goes below, it doesn't matter, but this low should be intact. If this lows break, if this low breaks, then it's another thing. But we want it to be higher than this low, no matter the point it gets to, but it must be minimum of this 50%. Then we have our third wave, but the bigger wave is still up. So this price action on the bigger picture is extremely bullish as it is. We can have a correction for this entire move. Then from the correction, once it's done correcting, we start having, once it's done correcting, then we start having from maybe wherever it corrects to 1, 2, 3, 4, 5 to make a wave 3. Then A, B, C. The other 1, 2, 3, 4, 5 to make the full sub wave 3 of this entire picture. 1, 2, 3, 4, 5, like that. So when you are looking at market structure, you want to be sure you are doing it correctly. So you want to know which is a real high to break and which is a low to break. So this is a high to break, this is a low to break, and for this side to make an higher low, and now it's reversing up, we are expecting it to break this high, which means we have a 0 to 1 to 2, and we are expecting 3. 3 can come in many shapes. It will retrace like this, comes up, retrace, comes up, retrace, comes up, retrace. We expect a full correction of this move. Then we expect another small moves in small waves like this till the 3 is created above this high. So chain link is also bullish. So that will be the end of our market structure lesson. Okay, before we end it, I want to see if I can get a trend line lesson. If I take a mark of this, okay, let's assume this is a low, we have an high, we have a higher low, higher high. Now this trend line has broken after minor support. Some people will expect it that the market structure or the trend has changed because this trend line has broken. So they want it to retest it and come back down. But what do they get? We have an higher high, which means the break of a trend line doesn't necessarily mean that the market is reversing. Also, look at this again. We have this low, right? Okay, it's almost equal low. It's almost an equal low. So the market structure was never broken, but the trend line was broken. And people will be here selling that this is the OB or the supply that broke the trend line. So they are shorting here. We have a minor red candle here before it takes them out because the structure of the market was never broken. What we had is an equal low. If the market has broken this low by coming down a bit and closing below it, then this will have been a good point to short the market for more downward move. But we didn't get that. So trend line breaks doesn't mean the market has reversed. It is an indication, that the market may reverse, but it is not an indication of reversal. I mean, it is not saying the market has reversed. It is an indication of likely reversal, not an indication of reversal. Market structure is king, and market structure tells you whatever the market is doing. Combine this with any of your strategy and you will understand the market like never before. Thank you for being patient with us and thank you for watching. Any questions, kindly put it across and I'll be glad to answer them. Thank you.